Let's do one thing. Let's also get you a quick handle on what's happening in the world of commodities. The equity markets are, cooling their heels a little bit. So let's take a breather there. Manisha Gupta is joining in to tell us about the commodity space. Manisha, what are you looking at?
I'm looking at the crude oil prices because we've seen a very sharp increase in this week itself. The low for this week has been $72.8 a barrel. So from 72, we are trading at a 77 on a high right there. So it has seen 2.5% of gains in the overnight market, and we have seen nearly 6.5% of a jump up in the week itself. There is optimism over oil demand, and there is an IEA report suggesting that, saying that the global demand will rise 200,000 barrels per day to a record 102 million barrels per day. But this is going to happen in the second half of this year. The U.S. crude inventories were up nearly 5 million barrels. That was a surprise number. But you have the U.S. gasoline inventories, which actually saw a very sharp decline. And this is a third straight week of a decline coming in. The demand in the meanwhile is the highest since 2021. So the distillate stocks have seen a decline where the demand seems to be increasing. Also, the U.S. is offering positive cues on raising the U.S. debt ceiling. So the concerns about any kind of a default or demand getting damaged yet again is something that the markets are easing with right now. It is also about the G7 meeting in Japan, which happens on 19th to 21st of May. Ahead of that, we have seen statements coming in from the European Union and other various countries about third countries which are avoiding sanctions right now on Russian crude oil. So this is any statement coming out of that. Any more sanctions could add premium to the prices going forward onto this one as well. There are various reports then that the markets are looking at in sense of OPEC and allies cuts, the higher demand outside of OECD, which is supposed to be on the supportive side. And then the Russian volumes to Asia are hitting all-time highs. That tells you that while, of course, the Russian supplies are coming in, but the Asian demand also is quite sustainable there. There are various statements from the banks and brokerages in the meanwhile. I'll take you through them one by one. ING, for one, says that there is lower than expected growth in US. That is about the supplies there, and that could be supportive. We also have a statement from Citi. They spoke to CNBC-TV18 also, and Edward Morse told us that the oil prices may have bottomed out, and they are looking at support from here on. $100 a barrel is not something that they're talking about, but the support could just about continue. Another report from Commonwealth Bank of Australia says that the rebound in Chinese demand is what they're looking at. If that happens, then there are much higher prices in crude that you could be looking at. Goldman Sachs is talking about $100 if there is demand from China and if the OPEC continues to cut 2 million barrels per day, as has the agreement been.
All right, Manisha, thank you very much for that.